Hello, good evening, and a very warm welcome to the next session of the Powerhouse Series BFSI course. Today, we will be covering off what we have left with the peers of the banking regulations. But before that, I would need some feedback from our participants. What do they think, or what have they learned from the previous two sessions? So let me just share the questions dialog box so you guys can see what the participants are saying. Feedback, people. Type in the chat box. How has been your experience till now? Thank you, Sayyid Danish Ali. Anybody else would like to share their thoughts? Usman Muhammad Ashraf, what you have described, that was my next question. But for now on, can you share your feedback? How was the session for you?
फिरोज की आवाज नहीं आ रही.
Am I audible now? Okay, that's fine. Okay. Any one of you who wants to recap what we learned in the last session? You guys can raise your hands. Until then, I'll read the comments. Mohammed Waqas Ghazi, a good overview of PR pertaining to financing activities, but a major portion pertaining to large number of AML KYC updates should be covered. I think Muhammad Ali would be able to comment on that. Uh, Anyone who wants to share a recap of the last session, please raise your hand.
Okay, I'll recap myself and then we'll move forward. Yeah. Can't hear you. Can you hear me? Am I audible? Yeah. Okay. I think I heard something that you said that we've not covered major portion of AML CFT, right? Feroz. Actually, these first few lectures are about the prudential regulations. AML-CFT regime is an entirely different set of regulations that pertain to anti-money laundering and countering financing of terrorism. So that there should probably be a session over the coming sessions that we have lined up. One of our trainers or one of our uh, set of trainers would probably touch on that area. For now, for the first two sessions, the mandate was to cover the prudential regulations, and obviously we have a time constraint as well. Considering the time constraint, we've selected not the entire area related to prudential regulations because the area is very vast. So we've had to choose what's the most relevant to our ACCA fraternity. Feroz, I think AML-CFT is an important area that should be covered. If you would like to, I do believe that one or more than one session would be related to the AML-CFT regime in Pakistan. But if there isn't one, I think a session on that should be added to the schedule as well. And that is a suggestion from my side.
Sure.
Hello?
Yes, Ali, you're audible.
Was I not audible previously?
You were. You may continue.
Okay. So what I was saying is, Feroz, that there should be a session on AML-CFT regime in Pakistan. So I think you can make a note of that. I would recap the session. What we've done is we've read about the banking regulation landscape in the country. We have Basel III that we are following. It is the central bank that is encouraging the banks to follow a certain set of regulations. We have different departments. The most important department is the BPRD, Banking Policy and Regulation Department. And then obviously the central bank is conducting both on-site and off-site supervision of the banks to ensure that the regulations are being followed. Then we touched more specifically on the Basel Accord, what the Basel Accord is, and obviously what Basel III represents. And then we got on to the prudential regulations. Like I said in my previous session, that SBP has issued prudential regulations on a wide range of types of financing that is offered by the banks. But we were going to touch three of those areas. These included what you call as corporate commercial banking, the prudential regulations related to corporate commercial banking. Then we have the SME bank financing, and then project financing. But having gone through the content, I believe that we should only cover SME financing in this session because the area is quite vast, and it'll be important that we maintain the quality of the session. So we would leave project financing for another time. So this session would solely focus on the prudential regulations related to SME financing. In our previous session, we did cover the prudential regulations related to corporate commercial banking. By covering that, we looked at the exposure limits that the banks could follow when they offer lending to the big corporate houses or commercial houses. We looked at the kinds of securities and the margins they can charge. We looked at how are they going to monitor the collateral that they keep, and we looked at how the banks are required to classify different assets when those loans that have been extended to commercial houses go bad. So basically, how are the banks going to classify or provision non-performing loans that they've offered to the big corporate houses? And finally, we had to touch the area of corporate governance. This is the second area that the prudential regulations related to the corporate commercial banking is covered. So PRs related to corporate commercial banking also cover the area of corporate governance. Now, being professional accountants, we all are aware of the fact what corporate governance guidelines are. They're basically how big organizations, big corporate houses are run. these are the set of guidelines that have been issued by the relevant body. But when it comes to Pakistan and banking in Pakistan, um, specific guidelines related to the Pakistani market and to the banking market have been issued by the State Bank of Pakistan and by the Securities and Exchange Commission of Pakistan. Banks are required to follow those guidelines. Um, uh, and then SBP specifically ensures that the CEOs, the directors of or the key executives of the banks, they go through a fitness and proper test. What is a fitness and proper test? Their integrity, their honesty, their reputation, their track record, their solvency, their integrity, their qualification, experience. This all information is shared with the central bank. Also, the elements related to the conflict of interest areas. All this information is shared with the central bank, and only after the central bank has okayed the executive, the CEO, or other key executive that would be on the board of governors of the bank, only then the bank is ready to have those people on the board. So the central bank has a very central role in ensuring that the board members of a bank are fit and proper, and they can take that particular bank forward. And when one bank goes forward, it contributes to the entire banking industry going forward. So here the central bank is playing a very important role. So basically, when it comes to corporate governance of the banking institutions in Pakistan, uh, banks are encouraged to ensure that they follow the guidelines, the corporate governance guidelines issued by the SVP and the SECP, and then obviously all the appointments onto the board, including the CEO, directors, and other executives, they have to go through a fit and proper test and go through the State Bank of Pakistan before the appointments are made. Another thing that can be very important to consider is to know how much shareholding that those directors, those board members have in the bank. It has been ensured by the regulation number 2, or you call it G2, that directors or officers or employees or their family members, they cannot hold more than 5%, 5% or more than 5% shares in the equity of the bank. So this is very important, so that those executives or board members do not influence the proceedings or the proceedings of the matters of the bank, or the decision making of the bank, that will basically set the direction. So it is basically the shareholding that has been touched, and then obviously the amount of contribution on donations that can be made to charitable, social, educational, and public welfare purposes. All these contributions have to be made as per the approval from the board of directors, and a proper policy in this regard needs to be in place. And all contributions, before they are made, they should go through a proper board approval. Because look, in the guise of contributions or in the guise of donations, there can be payments. There is a fear that payments that do not represent those donations may be made. So to counter such a thing or such a practice, what the central bank has done is it has made sure that there is a proper policy whereby the banks would offer donations or charity or social work activities as per approval of the board. If anything or any activity of charitable social nature that is against the board policy comes in the limelight, that will have to go through a lot of scrutiny, and obviously the relevant officials will have to face the consequences. And the next point that is important is that the credit rating is to be obtained. Credit rating of basically the directors, the CEOs, the board members. Banks are required to ensure that they take on the credit rating of these members on an ongoing basis. So this is an ongoing process. We are looking to make sure that we know what are the financial financial dealings of a person, to make sure that the person is not in a difficult financial situation. Because if somebody is in a difficult financial situation, obviously it would be wise to part ways with them in terms of their representation on the board. Because when a person is in financial distress, and that person is managing the affairs of a financial institution, then there is a fear that decisions that may be biased may be made, which would put at risk the interest of the particular bank, or the interest of eventually indirectly the interest of the entire banking industry. So corporate governance, we did not cover this area in our last session. So I have not only recapped the prudential regulations related to corporate commercial banking, but I've also touched on the PRs related to the governance of the banks. Now we move on to the prudential regulations related to the SME financing. One thing that I'd like to share here with the audience is that SMEs, they are a very important what you call as Feroz, can we have the slides on, please? The slideshow on, the presentation, please.
Is it visible?
Yes, please. Feroz, do we have the presentation on, please?
I'm on it. Just give me a second.
Yeah, fair enough. So by the time Feroz puts on the presentation, I'd being in the banking sector, I'd like to share with you the importance of the SME sector. Look, SME sector has a huge contribution to make to the well-being of an economy. Because can we move to slide number 23, please? Slide number 23, please, Rose. So yes, PRs related to commercial banking and the governance area. So slide numbers 23 to 25 were related to this area. I've already briefed you on this. Can we move on to slide number 26, please? 27, please. Slide number 27.
Yes, Ali, I have turned the 27th on, but it's updating.
Yeah, fair enough. So yeah, if we look at the background of the SME sector, look, I am working in the development finance division. So I do work on developing different SMEs, different startups. So it is a very interesting area. What I'd like to put forth is that the SME sector has a very big role to play if Pakistan is to develop over the coming years. And it is because SMEs are the backbone of an economy. They're not only contributing towards the national GDP, but they're also helping generate employment, and obviously the SMEs that are export oriented, they're helping earn the export finance as well, like foreign exchange as well. So it is a huge potential to support the economic growth of our country, to ensure that our economy is competitive. Um, I say competitive because look, at the end of the day, until and unless we are able to initiate or start organize or small and medium enterprises or startups that are right up there, we would not be able to compete with the international world. For example, I'd give you an example. We in Pakistan are not generating, we are not producing cars. Most of the parts of the cars are imported into the country, and then they are only assembled here, and then we sell on to our masses. Now, what that does is we have to import everything related to the automobile industry. What that does is we have to pay in foreign exchange. We have to pay in dollars. We have to pay in pounds when we import different things. So our foreign exchange is being depleted. Now, if we had an SME sector that was developed enough, where we would either be producing the parts or we would be producing inputs related to the car manufacturing, then obviously we would not have to import different parts related to the automobile industry. And we would save on the important foreign exchange, and obviously that would help us with the current account deficit. And every now and then we are facing different kinds of current account deficit situation, because of which we have to go to the IMF, like the recent episode, because of which the foreign exchange or the Pakistani depreciated considerably against the US dollar, and we were on the verge of Sri Lanka-like default. But obviously, thanks to the efforts of the central bank and the government, and obviously because we were part of the IMF program, that we have been able to come out of that crisis. But the point here is, until and unless we build our capacity, we would not be able to divert another balance of payment crisis over the future to come. So it's important that we as a nation work on building our capacity, and not only on the individual basis but also of our SME sector, because the SME sector has a huge role to play. If you go anywhere in the world, more than the bigger corporate houses, it is the SME sector that works as the backbone of an economy. It is these startups, it is these small enterprises, it is these medium enterprises that then eventually go on to become large corporations like Apple, like Amazon, etc., etc. As we've all seen that these organizations, these companies started from the garages of their houses. So obviously they started from somewhere. They started as a startup. They turned into a small enterprise, then into a medium enterprise, and then obviously to a large corporation. So the first step is basically the startup, the SE, the ME. So it's important that we focus on this area. Like I said, it is a huge contribution to make to the economic development of Pakistan. Now, how does a startup flourish? Now, if I have an idea but I do not have the money to convert that idea into a business, I would obviously not be able to start that business. For example, if I intend to start a pharmaceutical outlet or a pharmacy business, and the pharmacy business requires say 13, 14 or 15 billion rupees, but I only have 10 to 20, 1 to 2 million rupees, I would never be able to start a pharmacy of a good standard. I'd have to start from a very small, what you call as, I'd have to start from a very small setup. So obviously it'll take me time to reach to a certain point before I can really take off. I can convert my business into 2, 3, 4, 5 outlets. So it's important that financing is diverted to startups. It is diverted to small enterprises and to medium enterprises. And our banking sector or the financial sector needs to chip in this regard. Now, when this idea started of financing the SME sector, in the early 2000s, banks, they had a tilt towards large size medium enterprises. No one was looking to finance small enterprises, or they would even not even think of financing a small startup, a small cottage industry, or a small startup. So obviously, our cottage industry, our business startups, or our small enterprises have not been able to were not able to flourish as fastly as in some of the other economies in the world. So, like I said, SMEs have a very important part to play in the economic development of the country. It's important we build their capacity, but to build capacity, it's important we finance them. And how do we finance them? It is the financial sector that needs to finance them. But if we go back in the early 2000s, the tilt of the banking sector was towards large corporations, medium-sized enterprises. Nobody was looking to what you call as nobody was looking to finance business startups or small enterprises. In 2016, not a very long time ago, it's only 7 years ago, that certain amendments were made. Um, um, and then a proper policy for the promotion of SME finance was issued in 2017. And then a proper a national SME policy has been given in the year 2021. So we have lagged behind in this regard considerably, lagged behind in terms of financing the startups, in terms of financing the small enterprises. Because look, we have a very young lot of generation, that is entering into the professional world, the business world. So it's important that we are able to direct them in the right on the right path, so that they can contribute to the country's uplift. So better late than never. We've managed to introduce an SME policy in the year 2021. Now, all these developments have been taking place over since 2003 to now. And what the central bank has been doing over all of these years is, not only have they designed the prudential regulations so that the lending is being done in a manner that is prudent, but they've also made sure that all their PRs are amended, they are updated from time to time, to make room for the changes that are taking place. Whether the changes have been, they've been brought into effect by the central bank itself, or by another government department, or the government itself. There has been a huge focus on the development of the SME sector, especially when the last government ended, and obviously when things get better, the focus would shift again to the SME sector. Now, all these developments have taken place, and what the State Bank of Pakistan has done is that they've made required amendments to the PRs so that banks have a platform to work on. Look, if the prudential regulations do not allow something to a commercial bank cannot take that initiative. So the central bank plays a huge role. So these amendments, these updations, as changes have taken place in terms of uplifting the SME sector by providing them financing, State Bank or the Central Bank of Pakistan has played its role. We look at it as we go along. Now, some of the initiatives that have been taken over these years is, I'd just share those initiatives that have been taking place. Certain regulations have been changed. For example, there is an area where when a bank professional is assessing the credit worthiness of the borrower, and the borrower is an SME. Now, previously, when these developments had not taken place, the banks were required to obtain ECIB of the SC or the ME from the State Bank of Pakistan. But now, because there are more credit bureaus in the market, what the State Bank has done is that they've licensed more credit bureaus. So there is more data at disposal for the banks. So what the banks can do is they can not only obtain the credit report of a particular applicant from the State Bank of Pakistan, but they can also obtain it from another credit bureau that is licensed by the State Bank of Pakistan. This was not like this before. This amendment has been made as focus on the SME sector has shifted. Similarly, the reserve requirements have been updated, turnaround times have been updated over the years. We look at these specifically when we move along, when we move forward. Next slide, please, Feroz. One of the most important role that the recent national SME policy has played is that it has provided us with a definition of an SME. Now this definition is used all over Pakistan. FBR does not have a different definition of an SME. SECP does not have a different definition of an SME. State Bank does not have a now it's a there's a single definition of an SME. Now we call it as a national SME definition. You go around the world, you would find different definitions of SMEs, where small enterprises would be classed differently and medium enterprises would be classed differently. And obviously, you'd hardly find a regulation that be covering business startups. So what this national SME definition has done is that it has introduced a definition for a business startup as well. Now look, what we are doing here is what I'm doing in the first few slides is that I'm setting the base over here. I need to give you the background of the SME sector and introduce you to the landscape of the SME financing in Pakistan. I've done that in the previous slide. Now we are focusing on the definition of an SME. Now we being professional accountants, we've encountered and we do remain confused at times that what is the exact definition of an SME. Now the definition of SME can vary from country to country, and even in a particular country there can be more than one definition of an SME. But in Pakistan now there is a single definition of an SME, where a small enterprise is an organization that has an annual turnover, sales turnover of less than 150 million. Now there is nothing to do with the number of employees over here. Previously, all the different kinds of definitions that we've read, and they talk about sales turnover as well as number of employees. But our national SME definition has taken out the number of employee criteria. So for a small enterprise, it is an organization that has an annual sales turnover of up to 150 million rupees. When it comes to a medium enterprise, an annual turnover of above 150 million PKR to 800 million PKR. So any organization that has an annual turnover between these limits would be termed as a medium enterprise. Now it's important that a bank identifies an organization either as an SE or an ME, because when an SE or when an ME approaches the bank would have to use a different set of prudential regulations. The bank would have to approach in assessing the applications submitted by either the SME, SE or ME differently. Now we look at this when we go forward, but at this point in time, being from the banking sector and from representing the ACCA's professional accounting fraternity, it's important that we know what an SE is and what an ME is. And then obviously when we go forward and look at the PRs, there are different sets of PRs. So we need to know, say for example, I am a professional accountant working in an SE. I'd have to approach the bank accordingly, because there is a different set of needs and wants that the bank has from an SE. If, however, I'm representing an ME, a medium enterprise, there is a different set of needs and wants that the bank has from an ME. Now, the third area is a startup. What is a business startup? A small enterprise or medium enterprise. A startup can either be an SE or an ME, but its age should be up to 5 years old. That will be considered as a startup SE. Say, for example, you are an SE and your business age is less than 5 years, it'll be considered a startup SE. Similarly, if your turnover is more than 150 million rupees but less than 800 million rupees, you'd be classed as an ME. But if your business age is less than 5 years, you'd be classed as a startup ME. Now, business age is also very important. Business is an entire science. You learn that science only when you practically are involved in that particular business. Now, the more you're involved, the more for most of the time that your business has survived, that means that you have the guts to take your business further. We do have the opportunity to discuss matters with the banking fraternity, with officials from the banking sector, and I'd like to give you one feedback. Most of the banking executives that do work on assessing credit worthiness of SME businesses, they say that if a business has an age of more than 3 years, it gives them more comfort, or they're more comfortable to assess the credit worthiness of that organization, because they do not fear that this organization is going to fail, because as per them, if a business has survived for more than 3 to 5 years, that means it has seen all the ups and downs of the business world, and they place more trust on that business. They place more what you call as they're more comfortable with such businesses that have a longer age are more acceptable to a bank. So if you as a professional accountant, or if you are representing an SE or an ME that is a startup, your focus should not only be on taking your business further, but also by having something in mind where you should think of surviving the tough times, surviving for a longer period. Because the longer you're in business, and the more acceptable you are to the financial institutions, the more financing you can raise for your growth and for transferring on to a next stage in the business world. So this was the national SME definition that is uniform in the entire Pakistan. Next slide, please, Feroz. Yes, so we have now we are coming to the core area, to the area we are looking to address in this session. Now, as part of this, just give me a sec, sorry. The prudential regulations related to the SME are divided into 3 different areas. We have general prudential regulations that are related to both the small enterprises and the medium enterprises. Then we have prudential regulations that are specifically connected to the what you call as to the small enterprises financing, and the third area is prudential regulations related to the medium enterprise financing. First of all, we'll touch on the area related to the general guidelines that are relevant to both the what you call as small enterprises as well as the medium enterprises. First of all, what a financial institution needs to do is it needs to develop a comprehensive SME credit policy, a policy that needs to be duly approved by the board of directors of that particular bank. Now, as part of that policy, banks are required to give special attention or mention of the financing that they are going to extend to the small enterprises. Now, if we go to the background of the SME sector financing, you would recall that the tilt of the banking industry was the medium enterprises or the large corporations. Nobody was willing to lend to small enterprises or business startups. It is because of this that the most updated version of the prudential regulations requires banks to not only have a comprehensive SME specific credit policy, but also it wants that this policy has a mention of the small enterprises as well as the medium enterprises. Now, as part of these policy, what the bank has to do is that the bank has to ensure that there is enough staff, there is enough enough mechanism or appropriate mechanism in place. Now, I'd give you an example. During the previous government, a low-cost housing scheme was announced by the incumbent government then. We called it the Mera Pakistan Mera Ghar scheme. Now that what you call as a scheme was announced by the government, and the state bank announced it for the banks to start. But the problems we faced was that the banking sector did not have enough the appropriate mechanism in place. They did not have the relevant workforce. They did not have relevant departments. They did not have relevant administrative units in place. That is why the start of that scheme was very tough. There had to be a very hard and prolonged follow-up with the banks before things started to get smooth. So it is the same with the SME policy or the credit policy, that the banks need to make sure that they lay down procedures with regards to loan administration, disbursement, monitoring, and the recovery. They need to look at the staff positions. They need to know who is going to do what, the powers and authorities. They need to know who is going to approve and sanction certain amounts. For example, the sanctioning authority sanctioning an amount of 1 million, 5 million, 10 million. It could vary from bank to bank. Now, this entire, all these nitty-gritties need to be introduced or need to be included in the comprehensive SME specific credit policy. We have Azan now. Can we take a namaz break, please? Okay, we'll wait for the Azan to finish.
Can we delay that for 5 minutes so that the Azan is announced in all the cities?
Okay, fair enough. We'll wait for the Azan.
We can take the break after 5 minutes.
Okay, so we are back. So as part of, we were talking about the SME specific credit policy. So as part of the general guidelines provided in the prudential regulations related to SME financing, banks are required to ensure that they have an appropriate, um, a comprehensive SME specific credit policy in place. Um, like I said, for that they need to make sure that they have the administration and they have the disbursement monitoring and recovery mechanisms in place. They have enough staff available. They have specified the powers authorities related to the approvals and sanctions. They know the limits above or below which they would start insuring their loans. Um, uh, uh, Also, they should start to make sure that they standardize and simplify the loan application form to the extent that um, it is not too complex for the applicants. Now, if we talk about a large organization, a corporate house, they have lots of funds at their disposal. Not only do they have lots of funds at their disposal, because banks are more than willing to lend to them, but also because they have cheap financing available at their disposal. So it is not a problem for them to hire enough HR that is highly paid, and HR that is quite competent to work on complex application forms and to fulfill the related requirements. But for an SME, for an SC, for a startup, for an ME, they do not have um, too much finance at their disposal, so they can spend a limited amount of money on the kind of HR they hire. Or there would be businesses which are being run by the owners or by the families themselves. um, in that case, having a very complex application forms in place or a documentation process in place, it puts off the SME from applying for a loan, because they think it is too complex for them to fulfill. So what the State Bank has done is that they have instructed the banks to make sure that they are simplifying and standardizing the loan application form and the underwriting and requirements on an ongoing basis, so that the credit policy related to the SME financing gets better and better as we go along. Right. So the next point is, like I said, uh, financing is an entire science. You have a different set of areas that you need to cover as a bank, and not only to make sure that you are lending to the right people, to the right sectors, to the priority sectors, but also you're making sure that you're lending to the right businesses that are credit worthy of that financing, and tomorrow they would be able to return the funds that they've borrowed. So assessing credit worthiness is a very important point. Like I said, as part of their credit policy, banks need to make sure that they have all the mechanisms in place, from loan administration, from disbursement, monitoring, and recovery to credit worthiness. One important portion of assessing credit worthiness of an SME or a startup is to obtain their electronic credit information report. Now, there are two types of credit information bureaus operating in the country. One is the ECIB database that is being handled by the SBP itself, by the central bank itself, and we call it the Electronic Credit Information Bureau. Now, SBP is the custodian of this database. Uh, all the banks, all the financial institutions have access to this database. Whenever an organization, an individual goes and borrows money from the bank, banks enters data related to the funds that they've borrowed against that borrower in the ECIB database. Now, for example, if company A went today and borrowed 1 million from Bank Alfla, or say MCB or UBL for that matter, what Bank Alfla, UBL or MCB would do is they would log into their ECIB system using their login details, and they'd input all the data, the amounts, the repayment period against that company. Now, if that company were to go forward to another bank and borrow another 1 million rupees, now that bank has the facility to obtain a credit report from the State Bank of Pakistan. They'd simply log in, enter the details of that organization, and find and obtain a credit report of that organization. What obtaining credit report of that organization would mean is that the bank would know the amount of money that they've borrowed previously, whether they have been paying their or they've been making their repayments regularly. None of their repayments are overdue. So it's important that banks that are going to lend to an SME, that they obtain their electronic credit information report from the State Bank of Pakistan or any other CIB licensed and organization that is under regulation of the State Bank of Pakistan. Now, previously, like I've mentioned, that previously the only database related to credit information of a particular individual or an entity was being maintained by the State Bank of Pakistan. But over the last few years, what the central bank has done is that it has started to issue license to private credit information bureaus. Now, some of the names that I can recall right now is a database called as Data Check. Now, banks can not only obtain credit information report of an individual or a company from the ECIB database of the SBP, but also from another CIB licensed and regulated organization, for example, Data Check. So if I was MCB and company A approached me to obtain 1 million rupees as a loan, I would not only be able to obtain ECIB from SBP, but also ECIB from Data Check, like I've given you an example. There are other CIB licensed and regulated credit information bureaus operating in Pakistan. Not only should the companies or organization banks obtain an ECIB of an organization or an applicant, but also they should give due weightage to the credit report that they've obtained. By giving due weightage, I mean they should consider the credit history of that organization when they reach their credit decision. Now, there could be people who are in default or who are overdue with their payments. Now, as a matter of practice, what I've observed in the industry or in the banking sector is that banks consider an individual or a company that has defaulted or that is overdue, or an overdue is depicted in as part of their credit information report. No bank is willing to lend money to that organization or that individual. They consider it as a no-go area. Now, what the State Bank of Pakistan has done, or the central bank has done, it has said that taking exposure against a defaulter or that has overdue payments is entirely at the discretion of a financial institution or the official that is assessing the credit worthiness of that organization. That is assessing the credit worthiness of that organization. But if exposure is taken against a defaulter, proper reasons and justifications need to be obtained and documented, so that if that individual or that organization was to default going forward, that bank can justify why did they lend to that particular individual or organization when they knew that that organization or individual was in default. Now, here I'd like to add certain points, is that there are two types of defaults in the banking sector, or defaults can be classified into two different types. willful default, where a person has defaulted willfully and has no justification to offer, no reason to offer, and where a person has um, uh, circumstances have been such that the person went into a default. So we call it a circumstantial default. So two type of defaults: willful default or a circumstantial default. Now, what is a circumstantial default? For example, at the time of COVID, State Bank introduced a scheme that if a person cannot make payments, because obviously the business community was affected badly. So if a person cannot make payments, they can write to the bank, and in agreement with the bank, what they can do is they can delay their payments, the payments of the markup, or they can have their what you call as principals rescheduled. Now, this is a circumstantial, you can call it a circumstantial default. Circumstances were such that that person had to reschedule their loan or missed some payments, but in agreement with the bank. Now, we call it a circumstantial default. Or, for example, now if we consider, if we go into the current situation in the country, there's lots of flooding going on in the southern Punjab area. We've got DG Khan, we've got Rajanpur, etc., etc. These areas are under intense flooding. Now, the businesses operating in these areas would most certainly be affected. Now, because of this, problem, if a business has defaulted and the business has corresponded with the bank appropriately, that would be considered a circumstantial default. So under these circumstances, bank can take exposure against a defaulter, not against a willful defaulter. If I'm defaulting willfully, I am not. I should not be. You call it first deserved and desire. I do not deserve. I do not deserve to secure funding from the bank if I'm a willful defaulter. If I'm in the habit of defaulting. But if there were circumstances beyond my control because of which my payments have gone overdue and I've duly corresponded with the bank, it would be considered a circumstantial default. And obviously, banks can take exposure against such a borrower. The next slide, please, Feroz.
Should we take namaz break? Ali, I said, shall we take the namaz break?
Yeah, sure. How long?
I think 15 minutes would be, 14 minutes would be fine.
14 minutes. We come back at 25 past, yeah?
Sure.
Thank you. So yes, we are back after the namaz break. I'm audible, right?
Yes, you're audible, Ali.
Okay, great. So we've covered the first two guidelines, general guidelines related to the SME financing. We'll move on to the next slide, please. Next slide, please, Feroz. And now the next regulation basically covers uh, information related to securing the loans, how you are going to ensure that what amount of clean financing you can offer. And then obviously there needs to be a mechanism in place where you are ensuring that the money is being utilized properly. There is no improper utilization on the part of the SMEs. So the first portion is basically the personal guarantee. Any amount of funds that are extended to an SME, they would be covered or backed by the personal guarantee of the owners of the SMEs, except where the loan has been secured against a liquid asset. For example, if an SME was to borrow an amount of 1 million rupees, um, and no collateral was being offered by the SME, in other words, it was a clean lending of 1 million rupees, then obviously that loan would be covered by the personal guarantee of the owner of that SME. For example, the recently introduced Kamyab Jawan program, it was divided into three different tiers. The first tier was financing of up to 1 million rupees that needed no collateral. Uh, then was financing of, we call it tier 2 financing of more than 1 million to 5 million. Now that required collateral. And then obviously there was a third tier that was more than 5 million to about 25 million. Now the first year, where the amount of financing was limited to 1 million, did not require a liquid asset as a security or as a backing against that loan. Now that loan was secured against the personal guarantee of that particular SME. So personal guarantee area. So personal guarantee is an important as well. Lending to an SME is. Now the next point is about, am I audible?
Yes, Ali, you're audible.
Okay. Now the next point is about the limits on the clean lending to an SME. Now the maximum amount of clean exposure that a bank can take against an SME borrower is about is up to rupees 5 million. You cannot lend money more than 5 million and not take an asset as a security or as a backing of against that loan. So everybody needs to remember this limit, rupees 5 million. So for example, if you as a professional accountant represent an SME or are owning an SME and you require a loan of more than 5 million, then you should be ready to offer a collateral against that loan. If you do not have a collateral, then obviously you need to know the fact that you cannot secure that amount of financing from the bank. Similarly, if you are a banker and you have been posted newly into into a department that assesses the credit worthiness of a borrower or an SME borrower, you should know this PR, that any lending of above 5 million would require a collateral, and maximum amount of clean lending that a bank can offer to an SME borrower is up to rupees 5 million. Now, the next point is about proper utilization. Now, this is a very important point as far as I am concerned, because look, as a financial institution, it is not only important that you lend money to a particular borrower, but also you make sure that that money is being utilized for a proper purpose. For example, if somebody has borrowed money to finance the purchase of stock in his or her business, but that money is diverted to the marriage of his or her son or daughter, what they've done is they've misutilized the loan. Now, if they've misutilized the loan, they've not only shut down any business activity that would then be generated, based on which they would be able to not only earn return for themselves, but also pay the upcoming repayments against that loan. So when a repayment arises or falls due, that borrower would most definitely face trouble in repaying that loan. So it's important for a bank to ensure that there is a proper mechanism in place where it is ensured that the loan is being utilized in a proper manner. For that, the banks can have in place a proper monitoring mechanism in place. For example, if a bank is lending money to an SME against for the purchase of solar panels, it will be important for the bank to ensure that those solar panels are being installed on the premises. For that, the relationship manager or an officer of the bank, or a third party for that matter, can visit the premises and look for him or herself that those solar panels have been installed, and then obviously take a confirmation in writing from the vendor or an undertaking from the borrower itself that solar panels have been installed. So proper utilization of loan. The role of financial institution is not only to give money, but also to make sure that the loan has been utilized for a proper purpose. For that, they need to develop an appropriate system whereby the utilization of loans can be monitored properly. For that, they can even engage third parties or use their own staff members or use an evaluator to assess that the loan is being used properly, because misutilization not only puts that particular borrower at risk, but also the bank has to suffer with the non-performing loan, and obviously then that converts into a loss. Now, if we go into the 90s and we look at the agriculture financing horizon, we can see that there was Agriculture Development Bank or Agriculture Bank, Zarai Taraqiyati Bank as we call it. Lots of farmers or people with a farming background borrowed money from the Zarai Taraqiyati Bank, but eventually misused the loan, and the end result was that they could not repay the loan. They went into default. They were obviously lands were auctioned. There was bad name brought to the family, and obviously they were barred from borrowing again, not only from ZTBL but also from another financial institution. They had to face legal action. Not only the borrower suffered, but also ZTBL has had to suffer losses over a prolonged period of time. So the financial health of ZTBL is not very good. So much so that they do find it tough to extend further financing to newer borrowers until they've been paid by the previous borrowers. So proper utilization is very important. Banks should not only lend money, but they also should ensure that that money is being utilized properly. Next slide, please, Rose. Yes. So now we have basically we focus on the related parties. If they're an SME. Now, if an SME has a shareholding of more than 5%, uh, uh, now that bank or development finance institution should not take any exposure on that SME. The SME, the bank should obtain an undertaking in this context that they are not related to any executive of the bank, or uh, you know they're not related, or they're not the family of an executive of a bank. Because look, it's important that there is not any misdoing in how the business of a bank is carried out. Um, and it's important that financing is extended uh, uh, to the public as a whole. It is not concentrated to a certain few people. Now, to avoid any such thing where the executives or board members or other related parties to uh, to take advantage of the situation by being shareholders of a bank, and to avoid that situation, uh, um, a restriction has been placed that a bank cannot lend money to a shareholder who has more than 5% shareholding in that bank. To make sure that this is done, and or this is complied with, the SMEs may be required to provide an undertaking in this regard. Going on to the next point, translation of loan documents into Urdu language. Now, look, our national language is Urdu language. Uh, we have SMEs coming from all sorts of walks of life. We have people who are not very well educated, but they are running successful businesses, and they're doing very well in the business area. Uh, uh, so it's important that we have our application forms translated in the Urdu language as well, so that they can read and understand what is written in those forms, and can act accordingly. Now, when you go to a bank, as an SME or as a representative of an SME, you should be ready, and that the bank officer would provide you with a loan application form, and that loan application form will have the requirements that you need to fulfill, the eligibility requirements, the document requirements. So it will have all the information in it. Now, if that has been written in English language, and the person or the person that represents a particular SME does not know how to read English, obviously he or she would not be able to understand the content and would not be able to act accordingly. So it's important that financial institutions have the loan application forms translated into Urdu, so that a larger number of SMEs or the masses can understand what is in those forms. Next slide, please, Feroz. Now, the next point is about securing a loan. How does a bank secure a loan? Now, like we mentioned previously, that the clean lending is limited to about 5 million rupees. Anything over and above needs to be secured appropriately. Now, different sets of what you call as securities or collaterals can be obtained. They can be in the form of residential property. They can be formed in the form of securities. They can be in the form of gold. They can be in the form of national savings certificates. They can be in the form of prize bonds, etc., etc. But anything where a bank finances an SME and the amount is more than 5 million, the bank needs to secure that facility with an appropriate collateral. Uh, Without that, you know, a bank is not only there to lend money, but also to secure it. Because at the end of the day, the money that the bank is lending is of a depositor, because bank collects deposits and then lends money out of those deposits. So it's important that that money is secured. It is because of this, it is the regulator that has put in place prudential regulations, or regulations that the banks are bound to follow. Now, if a bank was to lend 6 million rupees and was not to obtain a collateral, when our BID team or a banking inspection department team goes to that bank and finds out such an instance, the bank would be penalized based on the penalty structure that has been designed in this regard. Why would the bank be penalized? Why is the regulator interested in penalizing the bank? It is because this regulator is looking to secure the money of the depositors. Now, we've seen that these prudential regulations are a general set of guidelines. Banks cannot go out of this, but they can make their own guidelines or their own policies even more stricter. Now, for example, a bank al can design a policy, a credit policy, where they can say that the maximum amount of clean lending that they are going to offer is rupees 2 million. Now, they're staying within the 5 million limit. But as part of their credit policy, they cannot say that they would offer clean lending of more than 5 million or of 6 million or of 10 million for that matter, because they have to stay within these prudential regulations. As a minimum, they can obviously make their own policies even more stricter if they so choose to, depending on the kind of risk appetite they have, the preferences they have. Because when we look at the banking industry overall, different banks have a different risk appetite. They have different set of preferences. For example, bank A would be more inclined to lend money to MEs in a certain sector, to SEs in a certain sector. For example, bank B would be more willing to finance renewable energy products, but bank C may not be willing to do so. So prudential regulations are a minimum set of guidelines that the bank needs to follow. They can make their policies more stricter, but they cannot make policies that are not that are beyond these guidelines. Now we have the margin requirements. Like we read at the PRs related to the commercial and corporate banking, that banks are free to choose their margin requirements as they find fit, but obviously they would need to stay competitive. And obviously there may be areas where the State Bank of Pakistan would chip in and would limit the amounts of margins that the banks can charge. So they would need to observe the margins, where they're not only making money, but they're competitive enough, and they're also within the guidelines issued by the State Bank of Pakistan. For example, now if an LC was being issued, LC against import was, we are a foreign exchange hungry country, so we'd obviously like to discourage exports as much as we can. Now we cannot have tariffs in place as part of the generally accepted trade tariffs. We cannot impose tariffs on imports. So we'd have to find other ways of restricting imports. So what State Bank has done is it has introduced, it has put in place margin guidelines, where if a person is importing something from abroad, they're not allowed to make money, pay money as soon as they import for that particular commodity, where a restriction has been placed. For example, it could be a luxury item. Now, what the banks are required to do is they are bound to obtain cash margin equivalent to the foreign exchange and keep it as a security until that commodity has been imported into the country. Only then they would release the Pakistani rupee or the amount equivalent to the foreign exchange in Pakistani rupees and make the payment against the import. So now a restriction was placed by the central bank, and banks are bound to follow that restriction. Similarly, State Bank of Pakistan can exercise its powers and limit the amount of money or the margin that banks can charge on the funding that they, or the borrowing, or the loans that they offer to a borrower. For example, State Bank of Pakistan, as part of recent initiatives, introduced an SME targeted scheme. It was known as SME SAF scheme. By SAF you mean clean. So it was a clean lending scheme where the maximum amount of clean lending was raised to 10 million rupees. So a bank could, under that scheme, under that product, that was State Bank of Pakistan's product, under that product, bank could offer the maximum amount of clean lending of up to 10 million rupees, and could charge 9%, and could not charge more than 9%. So now in case of that particular scheme, State Bank of Pakistan has exercised its powers and has restricted the amount of margin that particular SME could charge to that bank could charge to the SMEs. You can't go beyond 9%. Banks, now you can start charging 8%, but by doing so you're reducing your own margin, but you cannot charge 10%. So what you're doing is you're securing, you're not only securing your loan by obtaining a collateral, but when you secure your loan or the margins that you earn, you have to make sure that you're earning margins in a competitive manner and are staying within the restrictions and advice of the central bank. Now, there are other kinds of general measures that I'd like to touch upon. These are very important general measures, and these are related to the SME sector only. Now, by having general measures in place, what the central bank is doing is that it is giving an opportunity to the banks to flourish as far as their SME banking is concerned, so that they have developed products that are very mature, and they have in place the banking staff that is trained enough to best deal with the SME sector and to best process the SME financing applications. For that, banks have been encouraged to establish an R&D division in their institution. The purpose of these R&D divisions is to fulfill research related needs of their institutes and provide them support in adopting suitable SME banking and financing practices. Now, by doing this research, you can look at what the world is doing. Say, for example, you could study how the banking sector in the UK is dealing with the SME sector, and then obviously you can start adopting certain measures that can be relevant to your own economy, to the Pakistani economy. So R&D, you need to have a special division for that purpose, so that your SME banking, your SME financing, the products that you offer improve, and your SME banking becomes more mature as time goes by, so that you are better in a better position to cater to the growing needs of financing needs of the SME sector. Next, you need to have in place an efficient MIS, which will support reporting needs as far as the SME financing portfolio is concerned. Now, banks have to report at different sectors. Now, the MIS that needs to be maintained needs to be very efficient, so that reporting to different departments is done as a matter of priority and in an appropriate manner. Now, of course, look what the banks offer to the SMEs, how much they are lending to the SMEs, and that will be those figures are very important. Now, they should maintain database in such a manner that as and when a regulator or a government department requires, or an in-house department requires that data for internal or external decision making, the MIS is so efficient that most effective types of reporting can be done in a timely manner. Next, there needs to be a complaints resolution mechanism in place. Because look, we are looking to prioritize the SME sector. We're looking to make sure that the SME sector is dealt with as a matter of priority. The financing needs as a matter of priority. So until and unless we have an appropriate complaints resolution mechanism in place, we would not be able to address the issues that are faced by the banks. So the State Bank of Pakistan has encouraged banks to establish a complaint resolution mechanism so that the grievances of SMEs and stakeholders related to the SME sector are resolved. Because look, State Bank as a regulator is in touch with the business community as well through different Chamber of Commerces. For example, we have the Multan Chamber of Commerce, we have the Lahore Chamber of Commerce, etc., etc. So officials of the State Bank are in touch with the banking business community as well. So we have to make sure that their grievances are addressed. And we need to make sure that our banking sector is doing well, is taking their feedback, and is working on improving their experience. Next, banks need to make sure these are all sets of general measures. What these general measures are doing is that they're improving the overall experience that the bank, that the SME sector would have with the banking sector or with the financial institutions. We need to have in place customized lending products. For example, one type of financing we call as value chain financing was not very mature over the last few years. Value chain financing has improved considerably over, say, 3 to 5 years, over previous 3 to 5 years, where, for example, an SME that is into dairy business and is supplying milk as a product to say a bigger purchaser, for example, Nestle. What the banks can do is they can, based on the guarantee provided by Nestle, they can finance, they can assess the amount of milk that that particular SME is selling to a bigger corporate house over a month, over a quarter, and based on that activity, it can start lending to that SME. So here, a customized lending product has been designed. We have to find ways where we can finance, we can assess the credit worthiness of an SME. We can find SMEs that are worthy enough to borrow money and then lend them money so that they can be able to grow their business. And then last but not the least, it's important for the banks to build capacity of their staff, of their SME banking staff. Because look, each type of financing, whether it is agriculture financing, it is housing finance, it is consumer finance, it is SME financing, each type of financing is a separate set of science, where the staff dealing with such products or with such type of financing needs to be aware of what is going on, the kinds of documentation involved. For example, if an SME was to borrow 10 million rupees and was offering his or her residential property as a collateral, the person dealing with that loan application needs to know the kind of documentation for that property being offered that he needs to ask for from the borrower. Because look, if a person would not be trained, he would keep on asking for more and more documents. It would keep on delaying the loan application process, and it would lead to what you call as SMEs that are not very happy with the banking sector. Next slide, please, Feroz. Now we've gone through the prudential regulations that were general in nature, that were related to both SMEs, SEs, small enterprises, and MEs, the medium enterprises. Now we go on to the prudential regulations that are specifically related to the SE financing, to the small enterprises. First of all, these set of PRs, they give the definition of SE. We've read about the definition of an SE at slide number 28. An SE is an organization with an annual sale turnover of up to 150 million. As far as the per party exposure limit is concerned, for an SE, the maximum amount of exposure that a bank can take is restricted to an amount of rupees 25 million. Now, if the bank, if the just give me a sec, I'll have to elaborate a point. I'll have to look at the relevant. If, however, the banks have in place with them liquid assets like bank deposits, investment bonds, treasury bills, national savings certificates held under the lien, they can deduct those amounts. Securities that are perfectly liquid and are under the lien of the bank or with the bank as a security, they can deduct that amount from the exposure that they can take against a particular SE. For example, if a bank has offered 25 million rupees to a single SME, and the amount of liquid assets that they have with them are about 5 million, then that amount that they've lent or the exposure that they've taken against that party is 20 million. It would not be considered as 25 million. So per party exposure is restricted to a maximum of 25 billion. Obviously, liquid assets can be deducted from this amount. The third regulation is requirement of an audited accounts. Now, where the exposure being taken is up to rupees 15 million, banks are not required to obtain audited accounts. However, in cases where even in such cases, banks may wish to ask the borrowers to provide audited accounts. Sorry, I recall this. I represent my point here. Requirement of audited accounts. Now, where the exposure is up to 15 million rupees, banks are not required as a compulsion to obtain audited accounts. However, in this situation, banks may still obtain financial statements or financials of an SME that have been signed by the borrowers. However, where the amount being borrowed is more than 15 million, banks are required to obtain a copy of financial statements that have been duly audited by a practicing chartered accountant. Now, here the role of a professional accountant comes into place, like us. Now, we can, we have to encourage the SMEs we work for, and obviously, if we are building the capacity of an SME, or we are in a particular meeting, we need to be aware of the fact that SMEs are required to have their financials audited if they have to start borrowing money up above a certain extent. And look, financing is important at the end of the day if a particular business needs to grow over a longer period of time. So if we as professional accountants, if we are advising the SME the SE we are working for, or if an SE we have started ourselves, or an SE being run by our relative or our family, we need to advise them that for you to grow, it's important that you start having your financials audited on an ongoing basis, because by doing this, you'd be able to approach the bank in a more ready way and obtain a larger amount of financing. Obviously, there are other what you call as points to consider as well, but this is an important point. When you approach a bank and you have financials to offer, financials that have been audited by a practicing professional accountant, obviously they have more acceptability. Bank is more ready to trust such documents. Next slide, please. Now, the next point basically is the repayment capacity. All the previous regulations that we looked at was about how we are going to lend money and their limits, the kinds of collateral that we are going to have, and then we have to assess the repayment capacity of the borrower. Now, look, I could be a businessman. I could have, say, 100 millions worth of property at my disposal, but I'm not. But if I'm not a good businessman, I'm not worthy of what you call as obtaining the funds from a bank. So the bank needs to assess the repayment capacity of the borrower as well. Say, for example, if I've started a business and I'm only 1 year into the business and my revenues are not very strong, but I have 100 million rupee collateral to offer, and the future of my business is not very good, and I go to a bank, and a bank assesses my credit worthiness and looks at the cash flow estimations or the future of my business based on practical cash flow estimation techniques, that that banker would be able to find out whether my business is going in the right direction or not. And if the business is not going in the right direction, then obviously that SME is bound to fail. Where the banker assessing the credit worthiness of a borrower knows that the business is bound to fail or the future of that business is not very bright, that banker should, without any speck of a doubt, reject the loan application of that borrower. So repayment capacity on top of the collateral, on top of the security, is very important. How do you assess the repayment capacity of a borrower? You basically look at the cash flow estimations. You use different cash flow estimation techniques. You can take cash flow estimations from the party itself, from the borrower itself or the applicant itself, and obviously then as a banker you would have different cash flow estimation techniques or tools at your disposal when you work for a bank, which you can use to assess the repayment capacity of that SE. So yes, repayment capacity. Assessing the repayment capacity of a borrower is very important. Now, like I said, I work in the development finance institution, and we are always working to uplift the SME sectors, SMEs in different sectors, and we do interact with the banks on an ongoing basis. And one thing that I'd like to share here is that what a banker does. Banker is basically lending money on the basis of the cash flows of a business. If your cash flows are strong, you would be in a better position to borrow money for a bank, or a banker would be more ready to lend you money as compared to if you're not if you do not have strong cash flows, you do not have strong revenues to show. Now the problem with our businesses is in Pakistan is that businesses are running successfully, but they do not have the record to show. For example, if you go in a ghala mandi in any city, there would be hundreds of billions of rupees business being done on a daily basis. But if a shop in a ghala mandi or a shopkeeper in a ghala mandi was to approach a bank and ask for for financing, the bank would not be able to lend above a certain limit, because most of the business being done by a shopkeeper in a ghala mandi or an SME based in a ghala mandi is not what you call as does not have a record to show. He or she is not conducting business through his bank account. So he or she is not able to what you call as show his or give a proof of his cash flows. That is a red alert for a bank. The problem with most of our businesses is overwhelming majority of our businesses, especially based in the Mandi areas or in smaller cities, is that they do not prefer to conduct their business through the bank. They have manual registers where they are recording their transactions, which they're not willing to show even to their siblings or even to their children. Now, what that does is they're not declaring their cash flows anywhere. They do not have a bank statement for that matter. They're not filing their returns properly, so their documentation is not in place. Now, that is where a banker finds it problematic to lend money to an SE. Now, this is where the role of the professional accountants comes into place, and the professional accountants have to play their role in creating awareness among the owners of SEs, being advisors, being their consultants, that they need to start ensuring that they document their cash flows, uh, especially through their bank accounts, especially by declaring it with the tax authorities. Next is the collateral valuation. Now, like I said, it's important that banks obtain collateral when they lend money to an SE, but they need to make sure that that collateral is valued appropriately. For that, they can either use the services of their own evaluating staff, or they can hire a third-party firm, that is a Pakistan Bankers Association approved evaluator. Now, PBA, Pakistan Bankers Association, um, uh, provides or takes on board evaluators. They are considered as approved evaluators by the PBA, and banks can use their services to evaluate the properties that have been offered as a collateral by the SMEs. Now, recovery of outstanding dues. Recovery is a very important part as well. It's important that banks have an appropriate mechanism in place. They have proper staff, they have a proper department, they have a proper set of timelines where they would start sending emails, letters. They would take the proper recourse in collecting money where they've lent money. In doing so, they can visit the premises of a business and conduct cash collections or recovery at the place. For example, if a relationship manager has been chasing up a borrower for more than 2 months, and that borrower is ready to pay money on his or her premises or the premises of the business, the relationship manager is authorized to accept money. But the bank needs to make sure that there are appropriate risk management measures in place, because there have been instances where recovery staff have indulged in malpractices. So what banks can do is they can introduce mobile or wireless devices. So if an RM goes to the premises of a business and obtains or collects outstanding dues against a loan, he or she is in a position to offer a receipt, a computerized receipt, there and then. By doing this, they would not only be able to collect money, but also be able to secure the interest of the borrower, because the money that he or she has returned has actually ended up with the bank. Next slide, please, Feroz. Now, where a bank is lending to an SE, banks uh, shall maintain or are required to maintain a general reserve equivalent to 1% of their unsecured SC portfolio. The clean lending, where the money has not, the funding has not been secured, the banks are required to maintain a general reserve equivalent to 1% of their unsecured SC portfolio. Feroz, can you open Annexure 1 and 2? I've basically provided you as part of the documents.
Sure.
Now, classification and provisioning of the loans. Now, it's important we know how, as professional accountants, we know how we are going to classify and provision the loans. Now, Annexure 1 and 2 is basically related to financing to SEs. Now, where markup or interest is overdue by 90 days or more, unrealized markup or interest to be kept in memorandum accounts and not to be credited to income accounts. And provision of 10% of the difference resulting from the outstanding outstanding balance of principal less the amount of liquid assets realized. So provision of 10% person needs to be recognized, and the asset needs to be classed as OAEM, other assets especially mentioned. So we've given the classification. We have given a determinant where the loan is overdue for more than 90 days. There we would provide a provision of 10%. Now, as part of this session, I'd like to put in one point. It's important that you as professional accountants, whether you are in the banking sector or not, if you are to know the prudential regulations or the content related to the general banking regulation guidelines in Pakistan, you would have to read relevant guidelines. For that, you can start from reading the different set of prudential regulations. The next is the loan would be classified as a substandard loan where the markup or interest or principal is overdue by 180 days or more, and a provision of 25% would be provided. A loan would be classified as doubtful where it is markup, interest or principal is overdue for a year or more than a year, and a provision of 50%. And a loan would be classified as a loss. Can you move down, please, Firoz? A loan would be classified as a loss where a markup or interest or principal is overdue by 18 months or more, and a provision of 100% would be provided. However, there's one note that is to consider, where classified loans and advances that have been granted by the government of Pakistan, they are not required to be provisioned. However, the markup or interest on such accounts would be taken to the memorandum account instead of the income account, right? Because if the government has provided a guarantee against a particular loan and for the principal payment, obviously the government would be paying, so that payment guarantee by the government is sufficient enough to not classify it into any one of these categories. So can you go back to the presentation, please? So where the loans have gone overdue, they are classified into 4 different categories: as other assets especially mentioned, as substandard, as doubtful, or as a loss. Now the next guideline is recovery of outstanding dues. I think of the head, the heading here is to be used as restructuring or rescheduling of loans. I've miswritten this line. So regulation 9 is about restructuring or rescheduling of loans or advances. The banks can reschedule or restructure a loan, like I told you, during tough business environment. For example, during times of COVID, during flood times, for example, in South Punjab right now, banks have the discretion at the request of the borrower to restructure or reschedule a loan. Now the rescheduling or restructuring needs to be incorporated into the credit policy of that bank. However, where an NPL has been rescheduled or restructured, that rescheduling would not affect the classification of the loan. So I repeat, regulation 9 is about restructuring or rescheduling a loan or an advance, and banks are allowed to restructure or reschedule the loan as part, but they need to make sure that the rescheduling or the restructuring mechanism is inculcated as part of their credit policy. Where an NPL has been restructured or rescheduled, it would not change the classification of that particular loan or advance. It would be classified as it was being classified previously. And the final one is the turnaround time. Now, when all the documentation is complete, after that, banks are bound to ensure that they make the payment or they complete the credit approval process within 15 working days. That is when all the documentation is complete. So for example, if an SE applied a loan and the bank raised objections, um, then that 15-day period is not relevant. Now the loan application goes back to the borrower. Now, if the borrower takes 20 days to complete the documentation or to address the objections, in that case, the turnaround time of 15 working days would not be relevant. Only when all the documentation is complete in all respect, then the credit approval process should take 15 working days. So after the completeness of all documents to the satisfaction of the bank, is this turnaround time of 15 working days relevant? Next slide, please, Firoz. Now we turn to the prudential regulations related to MEs, medium enterprises. The regulation 1 against gives talks about the definition. We've talked about the definition at slide number 28. A medium enterprise is an organization with an annual sales turnover of more than 150 million up to 800 million. Now, as part of the financing process, banks are required to assess the repayment capacity of the borrower. Now, the repayment capacity of the borrower has to be assessed based on the cash flows of that business. Like I said, bankers are more willing to lend to a business that has stronger set of cash flows, that is generating more revenues, and has appropriate proof to give to show that those cash flows are actually being generated, not on a manual register. Like I said, that most businesses based in Ghala Mandi have manual registers. Those manual registers will not be acceptable to a bank. A bank statement showing strong cash flows. So banks are required to assess repayment capacity of the borrower based on expected future cash flows or assets conversion cycle, for that matter. Out of both of these, expected future cash flows are the most relevant and the most important as far as the Pakistani business banking sector in practical terms is concerned. And those expected future cash flows would be determined based on how good the cash flows have been over the last 6 months or over the last 1 year, for that matter. Then only the bank would be in a position to come up with expected future cash flows or the projections. Then there is the per party limit. With the SE, the per party limit was 25 million. Here the per party limit is 200 million. And here again, the banks are allowed to deduct the liquid assets. Next slide, please, Feroz. Requirement of an audited accounts. Now, in case of an ME, um, a bank is required to obtain a copy of the financial statements duly audited by a practicing chartered accountant, where that ME, the medium enterprise, is a limited company, or where the exposure that the bank is taking is more than 10 million rupees. So this is different from the SCs. In case of an SC, there was a limit of 15 million. Any SCE with an exposure of less than 15 million would not be required to provide audited financial statements or audited books. But in case of an ME, where it is a limited company or where the exposure exceeds 10 million, would be required to provide what you call as audited financial statements. Now we get to the classification and provisioning of the assets. Can we open an Annexure 3 and 4, please? There was an Annexure 3 and in case of an ME, The loans are classified into three broader terms: substandard, doubtful, and loss. In case of an SE, there were four classifications. A loan is considered substandard if it is overdue for more than 90 days, and provision is allowed provision is 25%. A loan is considered doubtful if it is overdue for more than 180 days, and allowed provision is 50%. And the loan is considered a loss where it is overdue for more than a year, and allowed provision is 100%. Now, in this case also, where the loan is guaranteed by the government, it would not be required to be provisioned. You're not required to provide, recognize a provision against that loan. However, the markup or interest on such accounts would be taken to the memorandum account instead of an income account. Now, where the money that was or the loan that was classified in one of these classifications, and eventually the money has been recovered, that classification would be reversed. Can we go back to the presentation, please, Feroz? Now, the recovery status of the loan needs to be reviewed on a quarterly basis. You need to review the loan that you have extended to a medium enterprise on a quarterly basis. Now, what that means is you're monitoring the loan as you go along. As and when you consider that the loan is being is not going, the recovery of the loan is not going in the right direction, you can take appropriate steps. You can either reduce the amount of your financing in a periodic, in a step-by-step manner, or you can simply recall your debt. The next point is the rescheduling or restructuring of the loan. Now, the rescheduling or restructuring is allowed, but where the rescheduling or restructuring is relevant to an NPL, a non-performing loan, and its status or classification is not changed unless and until certain set of terms and conditions are met. Next slide, please, Feroz. Now we come to the last slide, the turnaround time. In case of an ME, the turnaround time is 25 working days after the entire completion of the documents, or after addressing of all the objections raised by the bank to the satisfaction of the banker or the bank's representative. Only then this 25 working day time period or turnaround time is relevant. So this is basically it. We were given 5 hours to cover prudential regulations or the banking regulation landscape in the country, and we've only covered the prudential regulations related to the corporate and commercial banking, because look, as professional accountants, we are mostly working within the corporate or the commercial sector and the SME sector, and professional accountants are obviously working within the SME sector, or are advising or working as consultants to the SME sector, or are running their own businesses. So knowing these set of prudential regulations is very important. I do believe that this has given you a valuable insight into the prudential regulation. Obviously, we have not been able to cover each and every bit of these prudential regulations. That would only be possible if you as individuals or you as professional accountants have these documents or relevant documents at your disposal, and you know when to consult them, or you can consult them whenever you get time, or when you're encountering a situation, so that you can advise your clients or advise your employer or advise your own business accordingly over time. But as far as the SME banking is concerned, it's important. If you're working or running your own SME, or working as an advisor, or working for an SME, it's important that you work fully to create awareness that the SME improve their documentation status. They become filers. They start filing their returns. They start filing. They start declaring their tax matters. they start bookkeeping, they start maintaining their accounts, they start getting those accounts audited, and they start maintaining their cash flows with proofs. Because when they approach a banker is more willing to lend to an SME that is more documented, and that has better cash flows to show, backed by evidence. So this is basically it. I like the previous session, as I took questions. Feroz sent me all the questions, and I took my time out to send responses of those questions. You guys can either raise a couple of questions during this session, because we've about 5 more minutes to go, or write your questions, and I'd be more than happy to answer those questions. Last slide, please, Feroz. Last slide. Yeah, so basically the session is over. We could have covered project financing as well, but that too is an entire topic. I would not have been able to properly justify both the topics in one session, because that too should take about 2.5 hours or 2 hours at least. So I chose it was better to stick to one set of prudential regulations, and I do we've covered enough material during this time, and I do believe that we've made sure that we've done things in a clearer manner. Obviously, there may be some things missed. You can always send your doubts in the form of questions, and I'd be more than happy to address them. Over to you, Feroz, please, or anybody wanting to raise a question.
Thank you, Ali. Thank you so much. There are a couple of questions that the participants raised. The first one is from Muhammad Altaf Anwar. He wants to know ECIB report ID compulsory or have any other alternative?
ECIB report ID. Like in what context? If the person would want to elaborate on the question, please.
Sure. Altaf, can you please elaborate the question? The next question is from Muhammad Alamgir.
Okay.
Muhammad Alamgir is saying, after how much period the NPA asset being kept in loss category shall be written off from the accounts?
After a period of 1 year. Like I said,
okay.
if the amount is overdue by more than a year, that be categorized as a loss. And there would be a provision that of 100% would be recognized in the books. So that is, in a sense, you're recognizing that as an entire loss. Yes.
Okay, another question from Muhammad Alamgir. And what would be the accounting treatment if the asset becomes a performing asset later?
Obviously, you'd reverse the entire process. You'd recognize that as an income eventually, and the classification that you've done, you would reverse that. You would reverse that provision. So you pass an opposite entry for that matter. You take the provision out and you record it as an income.
Okay, the next question is from Mohammed Muhtashim. Does ECIB contains the data of individuals too, or just the SMEs?
No, it contains the data of any individual that has borrowed money from a bank. Because say, for example, I am Mr. A and I've not ever borrowed money from a bank. There would be no data in the ECIB. It would be, my ECIB would be clean. But whenever I borrow money, that bank from which I borrow money, as an individual or as an SME or as a corporate house, that particular bank would report my data in the ECIB. So I would become a part, there'd be a record against my name as an individual, as an SME, as a corporate house in the ECIB record. So ECIB data is maintained not only for companies, but also for individuals. I hope I answer your question.
Sure. Are there any questions from the participants? Till then, I'll have to make some announcements. Regarding the last session, we had some questions that were unanswered by Muhammad Ali, and we requested him to answer these questions. I took the log out of the questions, and I sent those to Ali. Ali was kind enough to answer those questions, and now I have uploaded that file in the handout section, the Powerhouse Series BFSI 17th August Q&As. So if any one of you didn't get your answers, you can download that file. It is also uploaded on the Google Drive. You can access the Google Drive from the BFSI recording links. The recording links are updated on the next day when the session has occurred. So you guys can access that. You don't have to wait for the session to go live and access this file. Once you have the Google Drive link, you can access it anytime. Question from Kashif Ijaz. Hi. I missed the first session. Did it cover? Yes, Ali.
Yeah, I have a suggestion that there was a participant that wanted a session on anti-money laundering and countering financing of terrorism. So I do suggest that there should be a session as part of this Powerhouse series. Yeah, so you can pass on your.
We will go through the contents, and we will assess if we have the capacity to cover these, or else we can launch these as a separate or single sessions. We will consider that. Don't worry about that. So Kashif was asking, hi, I missed the first session. Did it cover corporate and commercial lending? Yes, Kashif. The recordings are available on the BFSI recording links file. You can access the recordings. The content is on the Google Drive. You can access the Google Drive as well. Okay, a question from Amir Rame. He wants to know why banks are not educating SMEs so that they understand compliance and its importance for their growth.
No, I think banks are educating the SMEs. We as a regulator, we are pushing them on an ongoing basis. Banks are required to offer non-financial business advisory services to SMEs as well. And now, not only do banks offer those services, but also the central bank. We conduct SME clinics. We have 16 offices. So each office conducts at least 4 SME clinics for the SMEs to create awareness, to educate them how to approach a bank and to secure financing. So a total of about 70 to 100 awareness sessions are conducted by the regulator itself as a matter of a minimum compulsion. But obviously we conduct more sessions. Sessions are in hundreds as far as we as a regulator are concerned. And then obviously banks, as part of their corporate social responsibility, are required to create awareness amongst the SMEs and to offer non-financial business advisory services as well, so that banks are more aware and more educated to approach a bank and to secure financing. So I would humbly respond that your viewpoint that banks are not educating the SMEs is not entirely correct. Efforts need to be increased, and the regulator is playing its part to increase those efforts. Yes.
Okay, another comment from Nakash, a highly interactive session. Thank you, Nakash, for your attentiveness, I must say. Another announcement, I have seen a lot of questions regarding participants asking about whether this will be a verifiable CPD course or non-verifiable. So this course is of 40 hours of CPD units. This will be covered in a span of around 2 months. And at the end of the session, we will be giving out certificates. There will be 2 types of certificates, certification of completion, and the other one would be for participation. Any member who has attended the live sessions for at least 80%, which means around 32 hours, that member will be receiving a completion certificate, and rest of the members would receive a participation certificate if they fall below the 80%. But these are verifiable CPD units. And the BFSI is just first part of the Powerhouse series. The Powerhouse series consists of 3 more areas: taxation, audit and assurance, and public sector. So I hope that answers your questions. And if there aren't any further questions, let's just call it a day. And if you guys come up with any other question, Ali has provided his email address in his presentation that has been uploaded on the Google Drive. You can email him. I would request you not to uh, uh, bug him on his cell phone, but I would request you to just email him and he'll get back to you.
Yes, I'd be more than happy to get back. Yeah.
Thank you so much, Ali, for your knowledge, for your time, for your devotion for the members. One more thing, we will be meeting back on Wednesday. There will be a new trainer, new topic, and all I can say is stay tuned for the next session.
Great. Thank you very much, Feroz. Thank you all the participants. Take care. Allah Hafiz.
Thank you. Allah Hafiz.